Improving your credit score in 30 days is 100% possible. However, if your goal is to have excellent credit score, it's not going to happen overnight. And any company or person to tell you otherwise is just flat out lie to you, especially if you have made some mistakes along the way. However, the sooner you start working on your credit score, working on the fundamentals of how the credit score works and how you can improve upon it, the faster you will see results. In this video, we will discuss how to improve your credit score in a sensible way. And at the same time, we're going to talk about the 5 most important factors that drive your credit score in a positive way or on a negative way if you're not doing it right. But first, I want to thank all my fellow veterans. I truly appreciate all the hard work that you put in, and I wish you the best during your holiday. So let's understand what are the factors that affect your credit score, and we have to talk about FICO. The FICO is used by 90% of all the lenders out there, and the FICO is calculated on multiple ways. However, there's 5 main characteristics or factors that affect your credit score more severely than other ones, and those are the ones that we're going to discuss about in this video. So number 1, and the most important one to me, the payment history. That represents about 35% of how your FICO is calculated. And basically, your payment history is just how it sounds. It's just how are you paying your debt, and are you paying on time? Are you paying early? Do you have any late payments? So all those payments history that you have is going to affect positively or negatively how your credit score will be calculated, your FICO score will be calculated. So you have to always try to pay everything on time. Preferably, you want to pay a little more than the minimum payment, but at least you have to pay everything on time in order for that this portion, this 35%, is working for you and not working against you. The total amount you owe is another significant factor of how your FICO score is calculated, and it's roughly 30% of the weight of how your credit score is calculated. And what we're talking about here specifically is your credit utilization rate. And what that means in plain terms is how much of your available credit you are utilizing or you have utilized. And in order for you to improve your credit score, you need to try to have that as low as possible, between 10 to 20% on a monthly basis. Your length to credit history is the third factor of how your FICO score is calculated. And it's roughly about 15% weight of how your FICO is calculated. And basically what this is looking for is how long have you used credit, and also what is the average of all your credit accounts that you might have between credit cards, a home loan, a car loan, any type of credit that you might have is going to use the average. So for example, if you have 2 credit cards that you have used for 4 or 5 years, and you have that credit history, and you have been paying well, and your credit utilization is very low. However, within the past 6 months, you have applied for another 3 or 4 credit cards. Now your total length of credit history will be affected negatively, because the average of all those now new 5 accounts will be much higher than the first 2 credit cards where you have 4 years of history. So it will be 4 years of history plus another 4 years of history for the 2 credit cards, and then let's say 6 months for the next 3 credit cards. When you add them all together and you divide it by 5, it's going to be less than 4 years if you would have. So when you open a new account, take that in consideration, not to go and open too many credit cards or getting too much debt too quickly, because it will affect this, even when it's only 15% of your FICO. So keep that on your back of your mind. So the factor number 4 is your credit mix. And basically, and this represents roughly about 10%. And what creditors want to see is how good are you managing different type of credit accounts. This one could be credit cards, home loans, auto loans, personal loans, student loans. So all that mix of different type of credit accounts will give them a rough estimation. How do you manage your money, and how good will you be able to repay all that debt in the future? And the fifth and final factor that affect your FICO score is your what is called new history. And basically, what this is every time that you apply for any type of loan, like a car loan or credit card, the lender is going to run your credit history, which is called a hard inquiry. And that hard inquiry could have a negative effect in the short term. However, in the longer term, it will have a positive effect as long as the terms of the loans are acceptable to you and the interests are good, and the loan gets processed and goes through. That will have a slightly positive effect within your FICO score. Now that we understand what are the major factors that affect your credit score, so let's dive into what you need to do in order to improve your credit score. Step number one, pay your bills on time. It's that simple. Just make every payment, set it up automatically if you need to, if you forget, if you're a forgetful person, set it up automatically, but do not miss a payment. That is the key. If you do not miss any payment, if you pay everything on time, it will reflect positive in your FICO score. However, in this channel, I really don't believe in debt, especially on high interest debt like credit cards and personal loans or student loans and those type of debt. So if you want to have a, a significant improvement in your personal finance, yes, you can use your credit card. However, try to pay it off. Don't carry any balance to next month. Use it just to keep a high FICO score. And actually, by you using the credit card and paying the full balance before the end of the month will drastically improve your credit score much more than if you carry balance and you're paying all the interest and you're just pretty much giving all that money to the banks, and they have already enough money. So think about yourself. If you're in the position that you have a lot of debt, then try to work on ways that you can pay that debt efficiently, like the snowball method, or any other methods that you can find online. I have actually a video. One of my first video was about that. I think the second video or something. So you can go and take a look at it. Um, However, for this video, the purpose is for you to improve your FICO score. So, and the key here is just always pay on time, never miss a payment, and you will see how slowly but surely your credit score will increase. Step number two, just keep the balance low, man. It's that simple. Um, Out of your credit utilization rate, you want to be as low as possible. To me personally, everything that is high interest debt, you want to keep it close to zero. I never carry a balance to next month because I utilize a budget, which I have a video, and I'm going to link to the description above here. You will see a little uh, link where I manage my personal finance like if my finance were a business, like if I would be a business, and I set up my budgets, and that really helps me to never carry any type of balances in my credit card. However, again, we're talking about how to improve your FICO score. Try to carry as low as possible. So if you have home loans and car loans and different type of mix of loan, always try to keep them as low as possible. That will really, really improve exponentially your credit score, especially in the long term. So keep that in mind. Step number three, never, never, never close any old account. So if you have a credit card, which have a ridiculous interest rate of 20 something, right? 22, 23% that you got when you were in college, and right now you're 35, 40 years old, do not close that credit card account. Use it just a little bit just to keep it open. Never carry any balance, of course, so you don't have to pay that 20% interest, but never close any accounts because that will count for your credit history length, and that is super important for you to build up that FICO score. So again, never close any account, any old account. It doesn't matter how good or how bad it is, unless that, well, maybe let's say you have a credit card that you opened 10 years ago and you have to pay an annual premium, for example. Well, in that case, I will call the bank or the lender and I will ask them to remove that annual premium. If not, you can threat them to close the account. But if you have already good credit score, and what I mean is 750 and above, and you have, and your next oldest account is, let's say, 8 years old, I will close it if the lender does not allow me to just waive that annual fee, just so I don't have to pay that. But I will know that I'm going to have a little negative effect in the short term, and then eventually we'll go back up. But if you're starting, and especially if you have if you have made some mistakes in the past, just don't close it. Just try to convince the lender to waive that fee, and just keep it open for as long as possible. When you see the credit score go up, then you can start thinking about maybe closing it once you have enough credit history in the past. So that's very important. Never close any account. Step number 4, dispute any credit report inaccuracies. Lenders try to do the best job they can to provide accurate information. However, they sometimes make mistakes, right? I'm not gonna point any fingers, but sometimes they make mistakes. We're all humans, and so that's why you have one free credit report that you can download, and there's many companies that you can get them for very small fees, and you can do it more than once a year. And basically, what you want to take a look at, you want to take a look at all your full credit report, see what accounts are there, what accounts are not. If you see that there is any late payments, make sure that it's accurate information. And if there's no, and if that information is not accurate, just make sure to dispute that. So you can. There is a process that you can dispute. It usually takes 30 days after you submit your formal complaint or claim that that information is not accurate. They will do a review, and they will provide you a feedback. So it is your responsibility also to make sure that the information in your credit report is accurate. So I recommend you. I do it once a year. Some people, maybe at the beginning, you can do it more every 6 months, just to make sure that everything is working the way that you want. And especially if you're doing all the stuff that we're talking about today, and you don't see any significant improvement after 3 to 4 months, maybe run it and take a look at it and see, are they reporting the information correctly? Are they not? Something might be happening that is preventing your credit score from going up. So that's a really, really good recommendation. Before we finish this video, I want to give you one piece of advice from a friend to a friend. I truly believe that FICO and your credit score is really important, especially at the beginning, when you're in your early 20s and you most likely have no assets at all. It's really important for you to focus on your FICO score to make sure that you have the highest credit rating that you possibly have, because that will allow you to acquire appreciating assets at a lower interest rate because of your high FICO score. However, once you start developing your net worth, credit really goes to the back of the bus. It's not that important anymore. It's always good. You always, don't get me wrong, you always gotta keep a good credit score for anything that it might happen, any significant purchases that you would like to do in the future. But it changes the dynamic. Now you can use your appreciating asset to invest in something else. You can use other methods to acquire more appreciating assets to save more. So your budget is always important, but at the beginning, your FICO score, I think, is a little more important. But once you start developing net worth, then your budget becomes king. So again, thank you very much for staying until the end. If I missed something on this video, please share to me how long did it take you to increase your FICO score? Is it possible to increase your FICO score by 50 to 100 points in 30 days? I have never seen it, but let me know if you have that, and share with the community what did you do to have those significant jumps. All right, guys. So I'll see you next Sunday. Thank you and take care, man. And again, happy Veterans Day. Bye bye.